All right, guys, good morning. Good morning. Welcome aboard to the Morning Note. My name is Carlos Garcia, founder and CEO of GAR Capital. It is Wednesday, April 5th, 2023. Thank you so much for taking the time out of your day to join me this morning and every morning at 9 a.m. Eastern Standard Time. And if you haven't already, please make sure to hit that subscribe button. We're trying to get to 10,000 subscribers. Everyone helps. So again, really appreciate it if you did. Thank you for joining me again. Kind of a really choppy week. We know this is the week before Easter. We had a really great quarter in terms of ending the quarter for the market. Pretty choppy so far. Dow futures down 38, NASDAQ down 20, S&P down 8.5 points at 4120, Russell 1771, down about 0.5%. Had to take that L on IWM. Crude, we'll go over that trade here in a second. Crude oil down about 0.11% at 80.60. Gasoline futures are up 0.65%, $2.75 per. Gold futures, we'll take a look at that really quickly. And again, we posted that chart regarding possible triple top on gold. We'll go to the weekly. I want to go take a look at that thing. And again, 2089 is your resistance from last July. This is on the weekly chart on a 3-year basis. So again, we're starting to get really close to that. And I think the reason that we are getting a nice bid on gold is because the dollar has been falling, and we've been talking about weaker dollar, we've been talking about lower yields, and so far this quarter and so far this year has been correct. The S&P has benefited, the NASDAQ has definitely benefited from lower rates, but so has gold, at least since the October lows, which was right around 1700. That was your 200 moving average on the weekly. If you bought that, great. Again, I am not a huge fan of gold, but GLD is one of the top 10 stocks of 2023, which is GLD, and that's green. Not by a lot. Again, I don't like GLD the most, but again, just kind of sharing what I view in the market. Again, if you're looking at possibly taking some profits on gold, here wouldn't be a bad time. Pretty quiet sessions this week. So again, up to you. Again, you can play up to 2100, 2089 per ounce, but we're getting pretty close to that level. If you wanted to go long, the only problem is in terms of gold futures. Gold futures, the margin is a little expensive to trade futures. So you may want to go like half position on that. Or I don't know if they have micros yet, but I'll take a look and see if maybe we can take a look at that. We did trade futures this week, and we traded Forex this week. So again, trying to find opportunities here and there because the options market isn't the best in terms of just the theta, the time decay, and the setups. It's just been really chopped. But futures has had some opportunities. Maybe gold's one of them. Let me see if there's a micro lot of gold, and then I will talk to the team. Maybe we can play up to that 2089 level. We'll place a support maybe around 2001, if anything, but we'll keep an eye on it as we go, as we'll do the viewing cents by the dollar. So another one that we could play as a gold proxy here is the Aussie dollar, because the Australian economy is really focused on gold mining, one of the biggest gold mining operations in the world. So taking a look at Aussie dollar, again, this would be a nice way to short the dollar by going long the Aussie against it. Not really a good setup here, at least in terms of Forex, but again, the idea is kind of giving you the options to play the macroeconomics as you study. So again, it's important to have these indicators, gold, commodities like crude oil, copper, because that also opens up other doors for other opportunities, and let's say in Forex or futures, not just in the options market. Again, kind of want to be well-rounded as well. You want to see if there's other opportunities out there. The idea of doing these videos for you guys with GAR Capital and doing the signals, I started the business about 8 years ago in 2014, and it's always been, the mission has been the same. I want to explain the market the way I would want to read it. I wouldn't want to do death by PowerPoint or boring ass presentations. I was a college grad, but I dropped out because it just never had my attention. And I've always had a passion for learning, but self-learning. And I kind of wanted to bring that to the masses, to everyone that's really enjoys talking about this stuff, that really likes the markets and economics, because economics really is considered the boring science. But once you can take advantage of the rules and take advantage of the game, you get really good at it. It's kind of like people that find Monopoly boring. I love it. But again, if you find Monopoly boring, you probably find economics boring, for example. But again, the idea is to create the service and to create the company that gives you the information the way we see it, unbiased and just our view, and then using that information to trade. And with that, being said, the key as well is that I want the signals group to kind of be like an ATM, where you go in there, you make your trade, and you're out. And you're out. You don't have to stay in front of the ATM just in case it spits out more money. I just kind of want it to be like that for most people, where you don't have to be a pro. You don't have to know everything. But if you can focus on a couple of things you're great at and you just hit it hard and go for it, that's where the success happens. So just wanted to say that. Aussie dollar here at 67.12. I mean, I would be short the dollar, but again, this wouldn't be the best pair. So far, we're not seeing that gold correlation, at least in terms of the short term. Maybe from February, we're getting a little bit of that correlation with that gold bounce, but as of right now, that Aussie correlation is not in effect. So we'll keep an eye on it, but nothing special there. Let's take a look at copper, down 0.31%, $3.95. That's below $4. That doesn't bode well for the S&P in terms of that correlation as well. Euro dollar is flat, 109.57. We played euro dollar. We got stopped out yesterday. I think we gained about 17 pips. And really what we were targeting was that 110 level, and we got stopped out pretty much right here, 107.85. We moved our stops to that level, and then we just got wicked, and it soared. So the analysis was correct. Again, when it comes to Forex, you kind of want to move those stops just in case, really quickly. You want full control because it does trade overnight, and you never know. So euro dollar, if the team held it, great. We didn't. Dollar yen down about 52 pips, 131.04. Remember that correlation with the 10-year yield? 10-year yield's down 3.3% now, with the dollar yen being down 124.93. We're flat on Bitcoin, on the pound dollar. I don't like trading pound dollar. That is volatile. That's like the VIX of Forex for me. 28,760 for Bitcoin. That is up this morning. Ethereum testing that 2,000 level. That's important. And why is that important? At least on the future side. 2,000 here, that's a very big level. We always talked about the round number theory, kind of the Dewey Decimal, the top 10. That always grabs people's attention. If we get to 2,000 Ethereum, expect that to get to at least maybe a 10% pop to 2,200 as everyone tries to pile in. I wouldn't want to chase that initial move. I still dollar cost average ETH every week. Not a lot anyways. Again, I'm just bits and pieces over time. And again, once we break that 2,000 level, expect that people are going to go ahead and buy some more into it. Maybe some stops get hit. Maybe this is your opportunity if you bought in pretty low at 1,400, maybe at 1,300. Shoot, maybe at 1,200 you bought. Use that 2,200 level as a way to scale out a little bit on ETH. Take a little bit of profit if you want. Again, maybe you move it to other sectors of the market. Or if not, you just hold that thing because we got a gap to fill here at 26.31. So again, the idea is to give everyone options. Some people are just, I need cash right away. I want to move it around. And some people are like, just let it ride. I don't care. I just want to own it. And again, there's always two sides to the coin. Let's see. What levels are you looking for on Aussie dollar Forex guy here? Oh, okay, Alex. Cool. Let's do it. All right. Let's go ahead and go over Aussie dollar. And again, I don't see much there, Alex, to be honest, in terms of at least the 4-hour extended period daily. And again, what I want to do is use that gold correlation. Again, that would indicate a stronger Aussie. We did break down below the 200-day moving average. I'm looking here at 66.52 as possible support. You got two sides here. You look like you have a inverse head and shoulders and a regular head and shoulders. So what does that mean? It is absolutely chop. You're not touching that thing. So let's just move on to euro dollar then. Euro dollar, we have an alert at 110 exactly. Kind of treat it the way Forex, the ETH above 2,000 would. That's a very key level. That's the level of February highs. That would be equivalent 110 on a euro dollar to 4,200 S&P. Let's just say a lot of stops up there, a lot of resistance up there. That was the February highs. So again, we're above major moving averages. I expect that if we do break 110, we'll probably get an initial move. But again, we're looking for possibly 111.63, especially if the S&P breaks out in a seasonally strong April. We would expect the euro to go higher as well. We'll get an opportunity to go long on euro dollar. Again, the same thesis. The dollar going down, softer dollar, softer yields. That's what we've been saying the whole year, and we've been kind of trading that accordingly. Again, look at this breakdown now. Triple bottom. I don't believe in triple bottoms personally, but I think we're going to get a little lower. We're going to finally break that 100 level, probably by the end of April, especially if we have strong earnings. We don't know, but we just have to wait and see. 10-year yields, guys, it's breaking down. You're starting to see it. Yields are starting to go down now. Here's the problem with this. This is inflationary. So again, we're going to have a sense of a feedback loop in terms of the inflationary fight with the Federal Reserve. So again, if yields go down, that means money's getting cheaper. People will spend more money, which increases inflation. But the bond market is pricing in two things, really three. A Fed pause, possibly. That would probably be the number one answer. That the bond market, the smart money, is expecting the Fed to pause. They don't believe that they're going to hike anymore. I'm not in that camp. I think they raise another 25 personally, since the bank thing was contained. Number two, recession fears. That's really the key. We had a softer than expected JOLTS number. We have a softer than expected ADP private number. So the job openings are at least slowing down. Layoffs are accelerating. So are we seeing new hiring? We'll know on Friday with the non-farm payroll report. But again, in a recession, bonds usually catch a bid as a safe haven ahead of any kind of turmoil. So that would make a lot of sense, kind of recession holding. We just got a cut in second quarter GDP by Atlanta now. That's their forecasting. I think we were at 2.3 and we went to a 1.7 GDP for the quarter. So again, I'd expect 3.143 on the 10-year yield. We can get below 3% by the end of the first half of the year. That would be the end of June. And again, we may have some deviations here and there, but at least on the TNX side, it is showing lower yields. What does that benefit? That benefits tech big time, especially mega caps, especially growth tech, because that means they can borrow less. But again, we want to go ahead and kind of pivot that with HYG, which is the high yield credit environment, high yield credit ETF. Citrix is a tech company. They had to give a 14.5 yield, according to Bloomberg, since they just had a bond offering. They were trying to wipe that debt, Goldman Sachs. And again, those high yields really hurt borrowing. We're going to start seeing interest expense go a little higher on those balance sheets when we get those earnings reports on the S&P 500 with the beginning of the bank. So again, does HYG hold? You can see we have a convergence of major moving averages, the 100, the 50, the 200. And as long as we really hold above the 200, at least for now on HYG, high yield credit, then we should expect that yields should fall a little bit more, at least in the treasury market. Treasury market usually gets the first bids, and then you'll get investment grade, and then you'll get high yield, meaning junk. I want to go over this trade here. We had IWM yesterday, and I kind of felt yesterday with this loss, and I had to take it for a loss, that imagine you're playing a very big game in the NFL, maybe playing for a playoff spot. First play of the game, you throw a pick six. Pretty much the Dak Prescott special. That's, I guess, since I'm a Cowboys fan. And that's how I felt yesterday. We were literally right here yesterday morning, right around 179.36. We were green in the morning yesterday on our IWM calls, really just about 56 cents away from target. And right here, 9:30 in the morning, they just sold off. Banks sold off. Energy sold off. They couldn't sustain that hold from that OPEC cut. We hit some support, but again, it just got to the point that since it was expiring this week, I wish I could take that one back, but it did hit our alert at least. It's a trade that we would have made any other week. We just got hit on it. We got out for minus 80%. Not the way I want to start a quarter, obviously, but that's where we are currently. So just got to make that up. That's it. You just got to dust yourself off and make it up. And that's what we plan to do today. Keeping an eye on Tesla. Tesla needs to hold 190, right around here, 189.95. You could see that we're starting to get a little bit of a tightening of the wedge. Which way does it go, up or down? That remains to be seen. But as we zoom in a little bit, we do have that downward channel or bull flag broke out, and then we pulled back. We pretty much are retesting levels we haven't seen since last Thursday. So we'll see what we get on Tesla. I do have some calls for next week. Let's see if we can rock it. In terms of VIX, I told you guys last week, in terms of insurance, hey, keep an eye. Once you start below 18, or around the 18 level is a good time to buy some insurance. If you took that advice, cool. But again, you're not getting a ton of fear in the market either. All of this is just chop. Let's go to the S&P 500. Again, you could see that resistance is right around that February high. Very similar to the euro. So will the euro lead the way for the S&P? That remains to be seen. We'll see if we hold above 4,100. That's your key level in the S&P. It's been relatively quiet in the market this week. Again, we do know it's a short week. Friday we have non-farm payroll, but the market is closed, and Easter's on Monday. So we'll see what we get moving forward, and we'll take it minute by minute, hour by hour, trade by trade. Have a great rest of your morning. I will catch you guys tomorrow for the morning note. See you guys soon. Cheers.